Hello everyone, my name is Vedant and welcome to Markets Daily, a daily stock market insights and analysis podcast by Bajaj Broking. Our mission is always to bring our listeners, that's you, the daily financial news and advice that you will need before the markets open so that you can make the best decisions when it comes to improving your finances. Additionally, along with this program, if you require any more information, please do visit www.bajajbroking.in. With that said, let's get into today's episode. Starting with the top 5 news headlines for the day, gold rises in value as Iran's strike against Israel has stoked safe haven demand. In India, Engineers India has inked an MOU with Detect Technologies for real-time AI-based monitoring for implementing safe practices at their construction sites and progress monitoring for clients in India and abroad. Varun Beverages has started commercial production of carbonated soft drinks and energy drinks, with juices and value-added dairy products to also be started. This is all going to happen at its production facility at Gorakhpur in Uttar Pradesh. Additionally, ISMT has bagged a contract from ONGC worth approximately 3.44 billion rupees. And lastly, RVNL has secured an LOA for railway construction work. If you want to check out any news headlines that we might have missed, please be sure to check the podcast description box for this episode. And additionally, the last little bit of news, the FII and DII sales data. FII's net sell today stands at 8,027 crore rupees, while the DII's net buy stands at 6,341.53 crore rupees in equities on Friday. Moving on to the global market insights, US stocks sold off sharply on Friday, while the dollar jumped as investors grapple with rising geopolitical tensions and persistent inflation that could lead to diverging monetary policy between the US and Europe. Wall Street's main indexes all slumped well over 1%, with the S&P 500 posting its biggest one-day drop since January 31st, as first quarter earnings season kicked off on a soft note with reports from major banks. In terms of the numbers on Wall Street, the Dow Jones Industrial Average fell 475.84 points, or 1.24%, to close at 37,983.24 points. The S&P 500 lost 75.65 points, or 1.46%, to close at 5,123.41 points. And the Nasdaq Composite lost 267.10 points, or 1.62%, to close at 16,175.09 points. Concerns over a wider conflict in the Middle East were front and center after Iran launched a mass drone and missile attack on Israel over the weekend. While the strike reportedly caused minimal damage, it drew up the possibility of retaliation by Israel. But Israeli ministers reportedly signaled that retaliation would not be immediate in this case. Iran has also declared that its operation has concluded with no plans for further action against Israel, with the weekend strike being in retaliation for an alleged Israeli strike against an Iranian consulate in Damascus. Additionally, major economic data is due out this week, with US retail sales data due to be released on Monday US time, and Canadian and New Zealand inflation numbers due on Tuesday, along with Chinese growth numbers. British inflation data is also due out on Wednesday, and the Australian jobs data on Thursday. A slew of Federal Reserve policymakers are due to speak this week, including Chairman Jerome Powell, who could give further clarity on the future path of US interest rates. And moving away from the US to the Asia-Pacific markets, the Asia-Pacific market slipped Monday as traders weighed the impact of Iran's drone attack on Israel over the weekend, with focus also on key economic data from China and Japan later in the week. Japan's Nikkei 225 in today's morning trade fell 1.28% on open, while the broad-based Topix was down 0.97%. South Korea's Kospi fell 0.92%, while the small-cap Kosdaq dropped 1.58%. And with that, let's move into the insights for the Indian markets and indices. The GIFT Nifty suggests a gap-down opening for the Indian market amid weak global cues. The Nifty spot, after a negative opening, is likely to trade with corrective bias in the broad range of 22,300 to 22,500 levels. For the Nifty short-term outlook, Benchmark indices traded with high volatility and closed last week on a flat note at 22,519 levels. The Bank Nifty also closed the week at 48,564 levels, a marginal uptick by 0.2%. The Nifty started the week on a positive note, however, witnessed profit booking in the second half as US consumer prices rose more than expected in March, diminishing hopes for how much and how soon the Federal Reserve can cut interest rates. Rising crude prices on account of geopolitical tensions in the Middle East also led to negative sentiment in the second half of the week. The index on the weekly chart has formed a shooting star candle, highlighting profit booking at higher levels as Nifty reacted lower after almost testing our target of 22,800 levels. A follow-through weakness below 22,500 will signal extension of the last week decline towards 22,200 levels. Last week, the index reacted lower after testing the upper band of the rising channel in place since January 2024, and we believe going forward, the index is likely to enter a consolidation phase in the broad range of 22,700 to 22,200 levels amid stock-specific action on progression of the Q4 financial year 2024 earnings session. The short-term support for the Nifty has been placed at the 22,200 to 22,000 level range, being the confluence of the 10-week EMA and the lower band of the rising channel in place since the calendar year 2024, and the 61.8% retracement of the previous up move from 21,710 levels to 22,775 levels. Next up, we have the intraday levels for the day. For the Nifty, intraday resistance is situated at 22,500 levels, followed by 22,570 levels. Conversely, downside support is located at 22,350 levels, followed by 22,280 levels. For the Bank Nifty, intraday resistance is positioned at 48,490 levels, followed by 48,650 levels, while downside support is found at 48,110 levels, followed by 47,950 levels. And lastly, for the Fin Nifty, intraday resistance is positioned at 21,500 levels, followed by 21,580 levels, while downside support is found at 21,380 levels, followed by 21,290 levels. In our last segment about the Indian indices and markets, the derivative data analysis. For the Nifty, the major call open interest edition is positioned at 22,700 levels, closely followed by 22,600 levels, which will act as a resistance zone and seems difficult to surpass. On the other hand, the highest put open interest edition is placed at 22,200 levels, followed by 22,000, which will act as a crucial support for the Nifty. Put writers have shifted their position on the lower side, which suggests they are being cautious for the downside move, and across the strike above 22,600 levels, call writers seem to be active, indicating multiple resistance and negative data points. According to option chain analysis, the deciding range for the Nifty is between the 22,200 and 22,600 levels, and it seems likely to consolidate within this range. The Nifty's put-call ratio has decreased by 0.45 and now stands at 0.87. The Nifty witnessed a 1.9% decrease in open interest, accompanied by a 0.9% decline in price, indicating a trend of long unwinding. For the Bank Nifty, the substantial call open interest edition is observed at the 49,000 level, closely followed by 48,800 levels, which is likely to act as a resistance zone and may restrict the upside movement. Whereas the highest put open interest edition is placed at the 48,500 level, which is likely to act as a crucial support. Price breaching and holding below 48,500 may witness a corrective bias towards the 48,000 level, where the second highest put open interest edition has been observed. Across the strike above 48,800 levels, call writers seem to be active, indicating multiple resistance zones. And according to option chain analysis, the deciding range for the Bank Nifty is between the 48,500 and 49,000 levels. A significant movement could be likely on either side of the range break. The open interest for Bank Nifty futures decreased by 7.1%, along with a 0.6% decline in price, suggesting a scenario of long unwinding. And lastly, for the mid-cap Nifty, the major put open interest addition is placed at the 10,800 level, followed by the 10,900 level, which will act as support for the weekly expiry. While the major call open interest addition is placed at the 11,000 level, which seems to be aggressive and likely to restrict the upside move. According to option chain analysis, mid-cap Nifty is likely to consolidate within the range of 10,800 and 11,000 levels, and either side of the range break may trigger further directional movement. With that, we have exhausted all the news and insights about the equities market, so let's move into the insights about the other asset classes. The yield on benchmark US 10-year notes fell 5.9 basis points to 4.518% from 4.576% late on Thursday. The Federal Reserve Bank of Boston President Susan Collins is eyeing a couple of interest rate cuts this year, amid expectations it could still take some time to get inflation back to the targeted levels. The dollar steadied on Monday, holding its biggest weekly gain since 2022, as escalating conflict in the Middle East and the prospect of stubbornly high US interest rates gave support. Oil prices were a mixed bag in Asian trade on Monday after the aforementioned Iranian strike against Israel over the weekend pointed to worsening geopolitical conditions in the Middle East, with focus squarely on retaliatory measures from Israel. Crude prices had surged to a 5-month high earlier in April as markets feared any potential disruptions in Middle East production from a widening conflict in the region. Brent oil futures expiring in June rose 0.2% to $90.64 a barrel, while West Texas Intermediate crude futures rose 0.1% to $85.73 a barrel. And as mentioned earlier, gold prices rose on Monday, attracting some safe haven bids. Gold rose 0.7% to $2,359.92 an ounce in valuation, after having scaled a record of $2,431.29 an ounce in valuation on Friday. The yellow metal has climbed some 14% for the year thus far. And I'm just checking my notes and I'm checking the clock next to me. We have reached the end of today's episode. We have covered everything that we can, and we need to start knuckling down and getting ready for the markets opening later today. As always, I hope you all have gotten something meaningful out of today's program. And as mentioned before, for any headlines that we might have missed, please be sure to check the description box for this podcast episode. And for any additional information, please do visit www.bajajbroking.in. This podcast was made possible by the good people at Bajaj Broking, and we can't wait to bring more financial news and analysis to you when we return tomorrow morning. Cheers, everyone.
Investments in the securities market are subject to market risk. Read all related documents carefully before investing.